What's up, guys? Welcome back to Enzone. Today I got a banger for you guys. We're going to talk about how you use Fibonacci to your advantage based on an impulsive move. All right. So first things first, copy my settings. Here you go. Take a screenshot, put it in your Fib retracement. The tool is right here. All right. Cool. So we need to find out where the market is going because we're going to put our Fib level based on a trend. It can be a downtrend or a uptrend, right? And we're going to find out by looking at our chart on the daily. And as we can see here clearly, I'm going to link another video in the description where you can watch market structures. But here we got a downtrend, and here we got an uptrend, and here we got a little range, right? So based on those two trends, we're gonna put our Fib levels to find our new entry. The beauty of Fib is that it's gonna help you be patient in the market, wait for your entry level, right? Because it always opportunities in the market. Don't get FOMO, right? The move has happened, find your next entry. Okay, and one thing which is good to know is that the higher time frame is, you print your Fib level on, and you have to stick to that time frame, right? For example, let's say we're going to use the 4 hour. I usually use the 1 hour or 4 hour. And then let's see here. For example, we see a down impulsive movement, right? It's making lower lows and lower highs, as you can see here. Boom, boom. This level is lower than that. This is lower than that. It's a beautiful downtrend, right? So how do we get an entry at this trade? What we're going to do is that we're going to put our Fib level from the top wick, right, to the bottom wick right there. Beautiful. You see this wick? Catch it, right? So what we're gonna do right now is that we're gonna wait for a beautiful candle confirmation, okay? And we need always 2-3 confirmation before we do a trade. And we're gonna use, for example, moving averages. We're gonna use more equipment as our support system to find a new entry. That's a great English. Jesus fucking Christ. Okay. Either way, here we got a beautiful candle. This is a bearish engulfing 3 of those candles. So here we got a beautiful sell opportunity right there. All right. And put your stop loss always above last high, even more safe here, for example, okay? The purpose of those red lines though is that this is your support, all right? If the market goes above this level, it's gonna reverse and go to the upside. However, we printed it on the bigger time frame, so we're not gonna use all the way up there, you know, unless you have a good risk management level, but just above last high is also good in my opinion. And these Fib levels are your take profits, and we have our swing take profits down here, okay? So you're gonna just move it to one of those take profits. I usually aim for the last one, but I move my stop loss so I never get out of the market empty-handed, right? And when the market, for example, moves to the 0.382 Fib level or the 0.236, it's going to have a much quicker drop, okay? The higher it goes, the slower it's going to be. If it goes to 0.5, it's going to consolidate, for example. If it goes up here, for example, I can show you, it's going to move like, let's say it continued here, then it's going to go here, then it's going to go there, maybe even here, go there, go here, there. Do you see what I mean? And the lower it is, the faster it's going to move. So we love those low moves, okay? When it broke the zero, for example here, you can move your stop loss to, for example, entry, right? You don't risk anything anymore. And when it retested at this point, because it has been rejected here several times, you see that? You can actually sell again. For example, by this candle, right? You got a beautiful sell opportunity here as well. Short position right there. Put it above here again. And then you have another entry to this point. Right? Awesome. And when the market just moves, just put your stop loss to entry and just drag it down and just let it run, right? However, at some point, the market's gonna look for an opportunity to turn, right? So it was still making lower highs, lower lows here, as you can see. However, at this point, right here, right there, it made a higher high. So we know for a fact that it's not gonna continue down. It's a probability it's gonna range. So what we're gonna wait for is that it makes a high point and get rejected from that point. For example, let's say we put it here to there, right? Because it went up there. So what we're gonna do is that we're gonna drag it, then we're gonna look for a new opportunity, either to the downside or to the upside. When it got rejected here, we're gonna look for a new, this is not related to Fibonacci, however, I just want to show you some bonus tip. And you can see here, it engulfed all those candles. You could actually just buy here. It's a beautiful, beautiful buy opportunity right there. Boom. And then you just ride this bad boy to the top side of the what? Range, right? Boom. A beautiful trade. However, it started to make higher lows. Do you see that? Because this one is higher than that one, right? And you can use actually a trend line to your advantage as well. Let's say you put a trend line right here. So you know, okay, this is higher. This is respected, right? Boom. Respected, boom. And then it went up to the upside, right? Then went back down. And we have this resistant point, which now got broken, so it's a support. Then we start to look for a buy opportunity, right? Because the market is now bullish. It's in an uptrend, right? So as you can see right there, immediately I can just see it. But we're gonna use our fib to our advantage to find a new entry, right? And when the market is not as clear, for example, as the downtrend movement, for example, it was very easy to put it from the wick here. You need to find a candle which starts the move, okay? I'm gonna try to explain what I mean. For example, right here, you have a bullish move where it's starting from, right? Let's take our fib level from this point to the highest point, right? And if we drag it through, you see that it went to the 0.618 fib level. You can even have it here. Then you have a beautiful setup. However, I like the wick moves, so I prefer this one because it's also a beautiful move, but this is a more bozo, you know. Either way, you can also have it here, but it's just very important that you put on the bullish move. You can even have it here, right? But the best place to have it, in my opinion, was this one. So we put our fib level up from this point to this point, and now we're looking for a bullish candle which says, okay, here you can buy. For example, here we got a beautiful rejections, right? It's many people who are buying just based on it touches these levels. However, we got a beautiful support here, right? I'm gonna put up our support here. It has been, look at those wicks, right? It gets respected. However, I will not have entered before this candle, right? Why? Because again, it's engulfing, right? This candle eat all of those candles. Then we have our beautiful fib points, for example, here. And again, when it breaks the zero, right here, you just put your stop loss to entry. So you just run it risk-free, okay? Then we have our swing take profits as well, as you can see. And when it retraced again to the 0.27, and you got a beautiful hair candle, you could actually just buy again, right there, boom. Then you can aim for the next take profit. And if you just move your stop loss, you'll probably get another move up here as well. Yeah. Boom. Two beautiful trades in a downtrend, in an uptrend. Remember to have more confirmations, and that's important, okay? So let's say, for example, you got this support area and you bought at that, that's two confirmations. And you also got, for example, moving averages confirmation. Let's say, for example, here it started to cross. It's a buy opportunity there from the moving average as well. And here you also got a moving average rejection from 800, which could help you confirm based on this move. And then you can also set up another, let's just remove the lines. For example, a trend move right here, right? Boom. From the bottom, of course. So you can do it as nice as possible from here to there, for example. Right? Because you got rejected there, here, boom, boom, there, and buy. So that's all. I hope you guys enjoyed the video. Make sure to like, comment, and then subscribe. If you have any more video requests, just comment down below. Thank you for your time. Peace.